Global stocks rally stalled on Friday ahead of Donald Trump's inauguration on Monday. There are lingering concerns about the day one measures, some of which are priced in. Take a look at this next report as we decode the market move predictions ahead of Trump's first day.
Markets treaded carefully ahead of Monday's inauguration of President Trump. Trump's day one policies are expected to generate some volatility early next week. For now, the dollar is likely to stay in a holding pattern, retaining its overvaluation against some tariff-sensitive currencies. Forex markets are likely to enter into a holding mode amid some wait-and-see approach. The perception at the end of a busy week in macro news is that the optimism around a month-on-month slowdown in core inflation is cautious at best. The inherently forward-looking markets are factoring in Trump's inflationary policies from a starting point that is already significantly above the target. So despite stretched positioning and short-term overvaluation, the dollar continues to dodge true catalysts for a correction. Thursday's Senate hearing of Treasury Secretary nominee Scott Bessent was not particularly eventful for markets. He predictably stressed the need to cut discretionary government spending, a flagship Trump policy. But Bessent did not sound as hawkish as Trump on delivering new tax cuts. He said the U.S. faces an economic crisis if the 2017 Republican tax cuts aren't extended. Bessent stressed that maintaining the greenback as the world's reserve currency is critical. The Treasury Secretary said he believed Trump's policies will bring inflation closer to the Fed's target. In the first Trump administration, cabinet members often had to temper the president's strong statements. Analysts expressed Bessent to deliver more balanced remarks on fiscal policy, considering the impending debt constraints. The Fed enters the communication blackout period tomorrow ahead of the January 29th meeting. From a market perspective, some stabilization in most asset classes are expected early next week. Stocks struggled to make headway at the end of the week after a solid rally, while bond yields dropped on dovish remarks from Fed Governor Christopher Waller. Jose Torres at Interactive Brokers said investors are hitting the pause button following Thursday's momentous rally. The volatility in markets is expected despite China reporting 5% GDP goal. The clear reason is US tariffs threaten the growth outlook in 2025. In commodities, oil marked the fourth straight weekly gain ahead of Trump's second term, with traders seeking clarity on far-reaching sanctions and trade policies. Brent crude rose towards $82 a barrel, up about 2% for the week. Gold marked a third straight week of advances on bets. The Fed is set to cut rates sooner than previously thought. Bitcoin defied a broader market gloom and kept its momentum, with the OG token rising above $101,000. Cryptos are reveling and benefiting from bets on Trump trade. Business Bureau, WION World is One.
That's a war that should have never happened. I guarantee you, if I were president.
For all the latest news, download the WION app and subscribe to our YouTube channel.